In this video, I'm going to teach you exactly how you can start with $0 and make your first $10,000 on Amazon. Let's jump right into it. What's going on, YouTube? Welcome back to my channel. For those of you that are new, my name is Brad Sherman, seven-figure seller, and on this channel, we explore tips, strategies, and experiences that I have had that will help you start and scale up your Amazon FBA business. In this video, this is a full course from start to finish. How you can start with $0, exactly how I did it, and how you can do it too, to making your first $10,000 on Amazon. That's right, I said making, not selling, because there's a difference between what you sell and what you make. And we're going to dive into all of that. We are going to start with the basics. If you are a brand new Amazon seller, this video is for you. If you are an experienced Amazon seller, this video is also for you because we are going to teach you how to scale your business. Before we jump into it, if you guys do enjoy these videos, make sure to hit that like button. It really helps out the videos in the algorithm. Hit that subscribe button and notification bell as well to stay up to date on all future content. And if you guys haven't checked out the other videos on my channel, make sure to scroll through the channel because we cover things like sourcing profitable suppliers, how to contact brands and distributors, and shipping your products into Amazon. Also check out the free private Facebook group down in the description below, as well as our Instagram account, Operation AMZ. Without further ado, let's jump right into it. This video is going to be extremely comprehensive and is going to give the new Amazon seller all of the tools to start and scale your business and make your first $10,000 on Amazon. I have the whiteboard behind me. We're going to dive into it. So this video is going to be a step by step to your first $10,000. So you've decided to start selling on Amazon. What is next? Well, the whole concept of selling on Amazon is Amazon FBA, which stands for Fulfillment by Amazon. And what this means is that you purchase products from wherever your source is and you ship those products in bulk into Amazon's fulfillment centers. Because you are shipping the products in bulk, you're getting a discounted rate when shipping into Amazon's warehouse. Amazon will then charge you a fee to pick, pack, and ship your order to the customer when they order from your store on Amazon. The first thing you want to do before you create an Amazon selling account is to create a business bank account. So number one is business bank account. Now, why would you want to do this before your Amazon selling account? Well, Amazon is going to require you to link a bank account and prove that you are a real human being. So you will have to back yourself up with things like utility bills and personal forms of identification to prove you are a legitimate human being trying to sell on their platform. Amazon does not want counterfeits or fake sellers selling on their platform, so they are extremely strict with granting new sellers permissions on their platform. As long as you follow all their protocols to a T, you will be fine in setting up your Amazon selling account. That is the reason why my first step here is to open a business bank account. The other reason to open a business bank account first before your Amazon selling account is because you want, from a financial standpoint, all of your funds to run through a business bank account as opposed to your personal bank account. And Amazon doesn't make it extremely easy to change your bank account after you've already linked one with them. It can be done, but you have to jump through a couple hoops to get that done. And sometimes Amazon might put a freeze on your account while they are validating the new bank account. Now, Amazon does allow you to have more than one bank account on your selling account, but I would recommend just creating this business bank account in the beginning so that you're starting with a clean slate and you don't have to worry about any issues. After you've set up your business bank account, the next thing you are going to want to get is a business EIN. An EIN stands for an employer identification number, and it registers you with the federal government as a legitimate business. This is something that you obtain to secure your legitimacy as an employer, and if you do want employees down the road, you need an EIN. This is also necessary for tax purposes, and Amazon will want it on your account. So you have a business EIN. The next thing you're going to want to get is a resale permit. And a resale permit is specific to your state. The term is interchangeable between resale permit, state business license, sales tax and use form. All of those terms are interchangeable and it's specific to your state. So this is going to allow you to purchase the goods that you're going to sell on Amazon tax-free. Because Amazon is collecting and remitting sales tax from the customer on your behalf, you don't have to worry about reporting sales tax to the government. And this document allows you to purchase your products, whether you're buying them from retail stores or distributors, tax-free. The next thing you want to make sure you have, which I mentioned earlier, is a utility bill and ID. You have to make sure you have your personal identification to report to Amazon, as well as backup documentation such as a utility bill. For new sellers, Amazon will probably require you to get on a virtual call to prove your identification. Now that you've set up all 4 of these components, the next thing you're ready to do is to create your Amazon selling account. So now it's time to create our Amazon selling account. And you already have all of these things in place prior to creating the Amazon selling account. So let's briefly talk about an Amazon selling account. There are 2 types of plans you can sign up for as an Amazon seller. Number 1 is the individual plan. Number 2 is the professional plan. Individual plan means that you are paying $1 per item for every item that you sell, plus the Amazon selling fees associated with their platform, which we'll get into later. The professional selling plan costs you $39.99 per month, flat rate, no $1 selling fee, plus additional selling fees, which again, we'll talk about later. Which one should you do? Well, in my opinion, if you're serious about selling on Amazon, you should absolutely do the professional plan right off the bat, even if it means you're going to be paying a flat fee of $40 per month and you haven't sold anything yet. Why is that? Well, if you're selling more than 40 items per month, it's already going to make sense to get that professional selling plan. The other reason I recommend this is because you have access to way more tools such as different reports, advertising, and other strategic uses in the account. Not to mention, starting a business for $40 per month is really cheap. So let's briefly talk about everybody's favorite topic, which is Amazon selling fees. This is not going to be a full breakdown of every Amazon selling fee. If you guys do want to learn more about Amazon's new selling fees in 2024, I've linked my full breakdown up above, which covers all of the Amazon selling fees in 2024 and how they impact your business. But this portion of the video will be more of a high-level overview of what the Amazon selling fees are and what they mean for you. Amazon selling fee number 1, monthly storage fees. This is a monthly rate that Amazon charges based around cubic measurements of the item and dimensional weight. So there's a formula that Amazon has on their website that you can check out and you can read all about the monthly storage fees. We're not going to get into the specifics of the monthly storage fees. Just know that there is a certain fee. I will link down in the description below. I have included a pop-up of the monthly storage fees on the screen if you guys would like to take a screenshot. Again, monthly storage fees are based on how long you hold your inventory at Amazon's warehouse. So if you are turning your inventory within the goal of 30 to 45 days and not holding an excessive amount of inventory at their warehouse, the monthly storage fees you're going to be paying are very reasonable. Amazon starts to hit you with monthly storage fees when you're holding inventory at their warehouse for 3, 4, 5+ months at a time. And then they'll hit you with long-term storage fees if you're holding inventory at their warehouse for more than 12 months. If you have inventory at Amazon's warehouse for more than a year, you already have another problem to assess, which is your purchase decisions. The second Amazon selling fee is the referral fee. Now, in most selling categories on Amazon, this is a flat rate of 15% off of the sale price. So if you are selling an item for $100, Amazon is automatically taking $15 off that just to sell on their platform. This is why they call it the referral fee, because they are referring you to their millions of customers. There are some product categories that have a lower referral fee, as low as 8 to 10%. However, generally speaking, it's about 15% across most product categories on Amazon. The third fee is Amazon's pick and pack fee. This is based, again, around the dimensional weight of the item and whether it's standard size or oversized. I've linked down below more information about Amazon's fulfillment fee, and I'll include a pop-up on the screen for you guys to take a screenshot. Inbound placement fees. This is a new fee that was rolled out by Amazon in 2024, and it is a per unit fee based on where you send your inventory throughout the country, whether it's going to the East Coast centrally located or the West Coast, or if you're shipping your products to one fulfillment center versus multiple fulfillment centers, Amazon is going to charge you a fee based around that. Again, if you guys want to understand more details about the inbound placement fee, I've included a link above to my full breakdown of this fee for 2024. The secondary fee that is new in 2024 is the low inventory level fee. This is where Amazon is going to charge you a fee on some items based on if you are holding significantly lower than a 28-day historical supply. Again, the fee video that I've linked above will go into details about low inventory level fees and inbound placement fees. Returns processing fee. Amazon will charge you a fee to process your returns when a customer returns their item. This is because they are receiving the product back. It requires one of their employees to inspect the item, determine whether it's sellable or not. If Amazon determines that it's not sellable, they will ship the product back to you and they will charge you a fee for it. If it is sellable, Amazon will replenish it back into your inventory. We'll talk more about returns later, but it's important to note that oftentimes Amazon will send you products back that they deem unsellable but are actually sellable. I've also included a link in the description to Amazon's return processing fee, as well as a pop-up on the screen for you guys to take another screenshot. Now that we've covered an overview of Amazon's fee schedule, let's dive into how you can start selling on their platform. There are three main business models that you can choose from. Number one is arbitrage, number two is wholesale, and number three is private label. Based on the business model that you choose, the amount of capital that's required for you to start is going to be dependent on the business model that you choose. So if you guys want to learn more about the specifics of capital requirements, I've included a link to my how much capital you need to start selling on Amazon video above. Generally speaking, Amazon FBA arbitrage, whether it's retail arbitrage or online arbitrage, you can start with a few $100s. It's really cheap to start selling with that business model. This is because you purchase items from your physical retail store or online websites like Target, Walmart, Home Depot, and then you turn around and arbitrage the gap in price with what you paid for it and what it's selling for on Amazon. From there, you purchase multiples of those items, or as many as you can get. You purchase different items from these stores, send them into Amazon, and then sell them on their platform. And worst case scenario, if they don't sell on Amazon, you can just return them to the store that you bought them from. Wholesale requires a little bit more capital, generally in the $3,000 to $5,000 range, and private label generally requires more than $5,000 depending on your product cost that you're sourcing. And the reason why private label is more expensive is because you have to build marketing and promotion around your products to get your brand in front of more customers. With arbitrage and wholesale, we are reselling brand name products on Amazon. These are products that we are looking at a chart, which is Keepa. We'll talk more about Keepa later. You are looking at the Keepa chart and already seeing the demand before you purchase the items. So you can tell how many units are selling per month. You can determine what price they're selling at and the profit you are theoretically going to make on the item. From there, as long as most of the conditions stay the same, you can purchase those items and the data will prove true if you have good buying habits. Private label is a little bit more risky is because we can only look at general market trends and competition. We can't see that specific product that's selling for a certain price in certain sales data. Let's dive into an overview of what each of these processes looks like. So we covered a little bit about what arbitrage is, where you're buying products in store and then selling them on Amazon. Well, what is required of this? Well, you're going to want to get some tools to do RA and OA. Number one is Keepa. Keepa will allow you to see a historical view of the product. Things like sales volume, competition, how many sellers are also selling that product to know how many sellers are going to be competing against, as well as the price history. With Keepa, this is the most important tool when selling on Amazon because it allows you to see a historical view of the product as opposed to just looking at a listing and seeing that the listing is selling for a certain price and assuming that you're going to be able to sell it at that price. You are able to see a historical view of the price on Keepa, so the price today might not be what the price yesterday, and the same goes for the sales volume. The sales volume today might not be what it was yesterday. So Keepa is an extremely valuable tool as an Amazon seller, and it's actually one of the cheapest softwares at only about $20 per month. The next thing you're going to want to get is Amazon's revenue calculator, or the FBA revenue calculator. And this will allow you to look at each specific product, which is identified by what is called an ASIN, an ASIN number. And you will be able to punch that ASIN into the FBA revenue calculator. And from there, Amazon will give you exactly how much you're going to be paying in referral fees, fulfillment fees, monthly storage fees, assuming you hold a certain amount of stock, as well as inbound placement fees and shipping into their platform. So just to jump back here to fees for a second, we have our top line sell price. We have our referral fee, which is Amazon's flat 15% in most product categories. We have our FBA fee, which is based around the dimensional weight of the item and whether it's standard size or oversized. We also have our monthly storage fee, which is broken down by cubic foot and how much inventory you hold in their warehouse and for how long. We then have to ship our products into Amazon, which generally speaking costs about 50 cents per pound, depending on how many units you're shipping into their warehouse at a time. If you're shipping pallet loads, it might be cheaper than shipping small parcel. But again, this is very item dependent. But generally speaking, the shipping rate when shipping into Amazon's warehouse is considerably low than if you were to ship the products yourself through merchant fulfilled, which we'll talk about in a little while. And then of course, your product costs you have to deduct off of your sell price. So keep a FBA revenue calculator and then some sort of other tool that will help you streamline the process, such as Seller Amp or Inventory Lab / Scoutify. Inventory Lab and Scoutify are the same tool. What this will allow you to do, or Seller Amp, is that when you're at your retail stores, you can actually just scan the barcode of the product and it'll pull up a full picture of the item, what it's selling for, what your fees are. And then from there, you can punch in your product cost. You'll be able to click one button, jump over to Keepa and look at a full viewpoint of the Keepa chart, or go over to Amazon very quickly and look at what's happening on the listing on Amazon. So these tools are very relevant for not just arbitrage, but also for wholesale, because we talked about how these two business models, arbitrage and wholesale, are reseller based. You are buying name brand products that are already selling, have existing demand, and then purchasing and piggybacking off of an existing listing. You're not creating something from scratch. So with wholesale, what you're doing is you're purchasing either from brands directly or authorized distributors in bulk, and then you're selling those products on Amazon. The difference between this and this is pretty much just where you source your products from. This model, wholesale, is more sustainable than arbitrage, and this is my personal favorite, and wholesale is how we've scaled our business to 7 figures in sales. Wholesale is a much more scalable business because this requires you to duplicate yourself, go out to stores, shop on websites, hire other people in order to accumulate it. Whereas with this, you can contact 100 brands or distributors per week, do the work up front, and then set up those accounts, and then you're generating perpetual income so long as you maintain that account and the products continue to sell. So with wholesale, you're just reordering from your distributors or brands every month. With this arbitrage, it's constantly a hunt to find new products. Not to mention, this is more sustainable because you have legitimate invoices to back you up. Sometimes in arbitrage, brands issue out what are called intellectual property claims to sellers if they are not authorized to sell their products. So I wouldn't let that entirely steer you away from these models, but it is something to consider long term to further get that legitimacy and sustainability if you're trying to build a real business. The other thing with wholesale is that distributors, if you're purchasing from distributors and you're not authorized by the brand to sell their products on Amazon, you still might be dealing with the IP claims that you'd be dealing with here. That's why we really push in our community the brand direct wholesale business model, because not only is it scalable as all hell, it's also extremely sustainable. This is because you're authorized to sell all of the products you are selling on the platform directly from the brand. So you never have to worry about them issuing you an IP claim. And you can continue to sell those products on Amazon as long as you maintain a good relationship with the brand and you are able to continue selling their product. With private label, this is a little bit different than RAOA or wholesale, because again, you're taking a little bit of a bet on the market. So you have to assess things like the market, overall demand, overall competition, and you can use tools like Helium 10 Jungle Scout, and Viral Launch, just to name a few. With private label, another important thing to keep in mind is that you are going to essentially have to double your cost of goods sold for marketing. You have to get your brand name out there with private label, and the only way to do this is product promotions, giveaways, and discounts. You have to build a community in private label outside of just Amazon. That's because when you build a community, you are actually able to sell them a product, and you are creating existing demand. So private label is a great business model. It has immense rewards associated with it, but I would not recommend it for the beginner. That's because there are a lot of factors to consider, and you don't yet understand Amazon's logistics process or the ins and outs of selling on their platform. That's why the general pattern of progression for an Amazon seller is starting in some sort of arbitrage, whether it's retail arbitrage or online arbitrage, progressing into wholesale with wholesale distributors, which is a two-step model where you're purchasing from a business who purchases from the brand directly, and then gravitating towards brand direct wholesale, where you cut out the distributor and purchase directly from the brand, and then finally going into private label once you've amassed the knowledge of selling on Amazon and the different marketing components. Because again, private label is going to require you to have an understanding of SEO, content, and advertising, which are all things that we utilize in brand direct wholesale. So brand direct wholesale can be a nice transition into private label. Now that we've covered the three main business models on Amazon, let's talk about shipping and what FBA means versus FBM. As we said earlier in the video, FBA stands for Fulfillment by Amazon, whereas FBM stands for Fulfillment by Merchant. And the difference between these two is that with FBA, you're shipping your products in bulk into Amazon's warehouse. Amazon is picking it, packing it, and shipping it to the customer, and dealing with any customer returns or customer service. With FBM, you have to do all of that. So with FBM, the only fee that you're going to get charged is their 15% referral fee just to sell on their platform. Again, we said this fee goes down in certain product categories like automotive, it's only 12%, and there's other categories where it's as low as 8 to 10%. But generally speaking, it's 15% across most product categories. So with FBM, the only fee by Amazon that you have to pay is their 15% referral fee. However, you also have to pay shipping to the customer. So if you list an item on Amazon merchant fulfilled, you're going to have to ship that single item out at the standard parcels rate. So whether you're shipping USPS, UPS, or FedEx is going to require you to ship that item out as one unit. And because of that, it's going to cost more in shipping than if you were to use FBA, because with FBA, you're shipping a bunch of items in a box and the actual per unit rate works out to significantly less. With FBA, you also get the Prime badge. So it's incredibly important to get that Prime badge because this will award you with what's called the buy box on Amazon. If you guys aren't familiar with what the buy box is, go to any product listing on Amazon. I have a pop-up here on the screen for you to look at. And if you go to the right-hand side, you'll look at the price that the product is selling for. You'll see the add to cart, buy now button. And then beneath that, you'll see ships from Amazon, sold by whomever the seller is. Sometimes the seller is Amazon directly. Other times it's a third-party seller like you or I. And in that spot, if it says ships from Amazon and sold by your store, that means you have the buy box and you are going to get the sale. 99.9% of the sales on Amazon actually happen from the seller in the buy box, unless there is something significantly different, such as price or shipping time. Those two reasons might be the only reasons a customer would buy from a seller outside of the buy box. So whether or not you're a Prime offer, it's going to positively impact your buy box percentage, because generally speaking, FBA offers are more likely to get that buy box and therefore are more likely to get the sale. That's not to say you can't get the buy box with FBM, especially if your price is lower or if your shipping time is faster, right? So back to FBA for a moment. FBA, you have to pay Amazon's referral fee. Jump over here. With FBA, you have to pay their referral fee, which we said was about 15% in most categories. You also have to pay their pick and pack fee, which is based around the dimensional weight. You also have to pay their monthly storage fee, which is based around how many units you hold at Amazon's fulfillment centers and for how long you hold those units. This works out to a pretty nominal rate if you're keeping an adequate amount of inventory at their warehouse, but not too much. So we talked about the benefits of FBA and the benefits of FBM. Oftentimes determining whether you're going to sell an item FBA or FBM is dependent around the fees associated with the item, as well as the in-stock rate of the other sellers, how quickly you can get it to the customer. Maybe you can quickly list it merchant fulfilled, get your cash back and sell it on Amazon if the product is out of stock. If it's not out of stock and there's competitive sellers on the listing selling FBA, you're most likely going to want to ship your products into Amazon. To give you a point of reference, our business does 99% FBA. This is because it is much easier to scale a fulfillment by Amazon business than a fulfillment by merchant business, because Amazon is handling all the pick, the pack, the shipping, and the customer service and returns. If you had to deal with all of that, you'd have to pay somebody in your warehouse, or you'd have to pay a prep center to handle all of that outbound shipping and customer returns logistics. With Amazon, you're paying them, yes, a higher pick and pack fee, but you're getting all of these services in return, so it's ultimately a no-brainer. Let's briefly touch on the buy box and some of the factors that influence your ability to get the buy box. So we talked about how if you're a prime offer, you're more likely to get the buy box. We also talked about what the buy box is. So if you guys didn't watch what the buy box is, or you don't understand what it is, scroll back a little bit in this video where I just talked about what that buy box is, because that is super important. The buy box is the most coveted position on Amazon, and that's where you want to be as much of the time as possible, because it means you're going to be selling the products that you're purchasing. With the buy box, the number one factor that influences buy box percentage is price. So if your price is low on Amazon, you're going to get the buy box, unless competition's shipping time is significantly faster than yours. So let's say you're priced at $19.99 and your competitor is priced at $24.99, but your products are actually still in transfer to the Amazon warehouse and their products are already at the warehouse. So their products can get to the customer faster, and they might actually be getting the buy box $5 higher than you because they can ship them a lot faster to the customer. The third factor that influences buy box percentage is whether or not you're a prime offer. So if you're a prime offer FBA, you are more likely to get the buy box if all other conditions are the same for an FBM offer. However, if other conditions are different, such as price and shipping time, an FBM offer might get the buy box over you. The other factor that has an influence on buy box percentage is inventory levels. So this one is tricky, and we found interesting trends with it. But ultimately, we've come to determine that the more inventory you ship into Amazon's warehouse, the more likely you are to get the buy box. But however, it's kind of a catch-22, because if you do have the buy box, that means you're actively selling products, and therefore you're actively shipping more products into Amazon. And because you're shipping more products into Amazon, you're more likely to get the buy box. So yes, you're shipping your inventory in bulk into Amazon's warehouse. There are theories that the more inventory you're shipping into Amazon's warehouse, the greater ability that they have to disperse it throughout the country, and buy box is regionally located. So that's another factor here too, which is what region you're in, right? If you're on the West Coast, the East Coast, centrally located, or where your inventory is throughout the country, theoretically, if you have more inventory at Amazon's warehouse, they have had the ability to disperse it throughout more locations in the country. And because of that, you are more regionally spread, and Amazon can more quickly ship your products from a warehouse to the customer. And what did we say before? Is that Amazon wants to get the products to the customer as fast as possible. So inventory levels is highly correlated with the region that you're in, and how much inventory you have at Amazon's warehouse will determine the ability to ship your products to customers and how quickly Amazon can get it to the customer and ultimately give you the sale. The last factor that influences buy box percentage is your Amazon account. And what I mean by this is the age, size, and health and traction of your Amazon selling account. So if you're a really good seller, you've been selling on their platform for years, you have a strong sales history, you have no account health dings, you are probably more likely to get the buy box than somebody with 2% feedback. Now, in a drastic example like that, it's proven true most of the time. However, if you're going toe-to-toe with someone else who has a similar size account, it might be not so much of a factor. This is generally the influence in the trend of how you're going to get the buy box. However, we have to realize that in most cases, even in this case with the age and size of the account, price is going to be the main factor, or unless we're significantly faster to ship. This buy box algorithm speaks to everything Amazon wants on their platform, and you have to understand that these two factors are the main factors that Amazon wants on their platform. Number one is low pricing, and number two, happy buyers. And the way to create happy buyers is to get it to their door in 2 days and get them those products at a low price. So if you can align yourself and your business with what Amazon wants, they're going to reward you with the buy box, and as a result, you're going to sell more inventory, and as a result of that, you're going to scale your business much faster. This is a great transition into what we call repricing. So if you guys are not familiar with what repricing is, I'm going to share with you what it is. Repricing means that you are staying competitive on your products with that buy box. That means if my competition is priced at $19.99 and I'm priced at $21.99, I'm most likely going to want to reduce my price to $19.99 in order to get that buy box that we talked about. Otherwise, I'm not going to be selling anything. Again, the only instance where it might not make sense to match your competitor's price is if you can get it to the customer significantly faster than your competition. And then maybe you'd want to price a little bit higher so that you can make that extra margin because the customer is willing to pay more to get it faster. The other thing you have to realize on Amazon is that prices change all the time on products. So the price today is not going to necessarily be the price tomorrow. And because of that, you have to constantly be staying competitive with your competition. The only way to do this is to get an automatic repricer. Generally, my rule of thumb is if you have at least 10 items in your inventory, you should have a repricer. And this is because it's the only way to stay competitive on price. It is impossible to manually reprice products if your competition is changing and running on automatic repricers constantly throughout the day. So with an automatic repricer, such as Aura or Seller Snap, you can utilize this repricer, set parameters around it, and the repricer will automatically stay competitive with your competition, use AI and learn from your competition to help you stay competitive and get more sales. A repricer is one of the most important investments because it's going to allow you to scale your business and sell more products. I just want to stop for a moment before we jump into the next segment of this video because I want to highlight the softwares on Amazon. We talked about a bunch of different softwares on Amazon and it might seem overwhelming, but I really want to simplify this because it's not. The first software you want to get is the Amazon selling account because without it, you can't sell on Amazon. It's going to cost you $40 per month. The next software you're going to want to get is Keepa. Keepa is going to cost you about $20 per month. And you can't make purchase decisions without Keepa because you need to see a historical view of the price, the competition, and the sales volume. The next software is a tool like Seller Amp or Inventory Lab. Inventory Lab is something that we use, which is linked with Scoutify, product research tool, and you can utilize this for right around $40 to $50 per month. The next tool you're going to want to actively be using is the FBA revenue calculator. This is free. And finally, you'll want to get a repricer. And the range of repricers can range. Some repricers are under $100 per month, others are a few $100s per month. So do your own research on a repricer. I would recommend either getting Aura or Seller Snap as a repricer. They're great tools and we have used both in our business. So between all of those softwares, you're really only at about $300 to $400 per month. And to start a business in the current day, it is really not expensive to be spending $300 to $400 per month. And you don't even need the most expensive repricer. You can get a repricer for maybe $100 per month, and it's going to scale your business because you're selling more products and it'll more than pay for itself. So think about what the cost would be if you were to start a business like a restaurant or some type of other brick and mortar store. So starting to sell on Amazon really comes with minimal overhead. We talked a little bit about returns earlier on, and I want to jump back to that. Amazon returns is something that not a lot of people talk about, but it is a factor in your business, and it's something you want to consider. When shipping into Amazon's warehouse, fulfillment by Amazon, you're sending your products in bulk. Well, let's say Amazon ships one of your products out of their warehouse to a customer. The customer doesn't like it, or they break it, or they don't know how to use it, and they just don't want it anymore. So Amazon makes it very easy for them to take that item within 30 days and return it back to Amazon's warehouse. From there, one of Amazon's employees will assess the item to determine if they believe the item is sellable again and can be put back in your inventory by them, or unsellable, meaning it has to be shipped back to you for you to do a further assessment. Now, many times Amazon's employees will say that something is unsellable, they'll ship it back to us, and we will determine that it actually is sellable again, so we can then relist it on Amazon. So we are not out of the cost of the product because we're just selling it again to the customer, so the return is going to cancel out when we sell it again. However, there are products that get shipped back to us from Amazon that are just destroyed and we cannot sell them again. So what can you do with unsellable items? Well, you can, if you work with brands directly or authorized distributors, you can actually obtain the missing parts for that product from that distributor or brand and then make a new product out of it and then ship it back into Amazon to sell it as new. The other thing you can do if that option is not available to you and you're doing, say, arbitrage, is you can resell those unsellable returns that can't be sold on Amazon on eBay, and you can sell them as used on eBay. The other thing you can do is you can sell them at a flea market, or you can donate them and write them off on your business, or you can just throw them out. But generally speaking, returns are going to be dependent on the product category. And I would recommend trying to get some sort of dollar back on them, whether it's 50 cents on the dollar, because this can add up in your business. So certain categories like electronics and clothing are going to have much higher return rates than, say, a category like grocery. Grocery, Amazon customers can't return the products because it's a non-returnable category. So you're going to have a much lower return rate in a category like grocery than you would in a category like clothing or electronic. Fulfillment by merchant returns, so you purchased that product from the store or your distributor or brand, and then you listed it yourself on Amazon. You shipped it out to the customer through merchant fulfilled. Well, you're now going to have to deal with the customer service. Amazon will handle the return itself on their back end, but the customer will select return on the item and then they'll ship it directly back to you. And generally speaking, you will be responsible for that return shipping. So the customer will ship it back to you. You will make an assessment of if the item is sellable again. If it is, you can list it FBM, you can send it to Amazon's warehouse. If it's not sellable, you can sell it again, either on eBay, get the parts from your manufacturer, or donate it and write it off on your business. Now that we've covered a full tutorial of how to start selling on Amazon and go from scratch to $10,000 per month in sales, I want to talk more about those specific numbers as well as what it means to be an Amazon seller. So for one, Amazon selling, specifically arbitrage and wholesale, is all about rinsing and repeating the process. So again, you source at the store or you source on your website, you purchase those products, you obtain them, probably shipped to your house, you pack them all up into a box or multiple boxes, and then you ship them into Amazon's warehouse. You then have to get more inventory and completely rinse and repeat that process over and over again. With selling on Amazon, it's all about feeding the beast. So the more inventory you send into Amazon, if that inventory is selling, your sell-through rate of that inventory is going to be a percentage of the amount of inventory that you have. So just keep feeding the beast. The great part about wholesale is once the account with the wholesale supplier is already set up, it's very much so a turnkey business model, because all you have to do is make sure you are continuously stocked and replenish your products in Amazon's warehouse, and you do that through placing a purchase order with your supplier. They will then ship the products either to you or they'll ship it directly to Amazon. You'll send them shipping labels. You'll prepay for the products unless you're on net 30-day terms, where they're extending a window of time where you don't have to pay for your products until 30 days after the invoice. And they ship those products into Amazon or they ship them to you. And regardless, it gets into Amazon's warehouse. Amazon picks, packs, and ships the products to the customer, and then you replenish those goods once the inventory starts to reduce. One of the most important things about running an inventory-based business is keeping that just-in-time inventory. And this comes as experience comes. So you're not going to get it right the first time. That's why we say always place test orders and purchase a small amount. Go wide and not so much deep. As a beginner Amazon seller, you don't want to purchase thousands of units at a time on one single SKU before you've ever sold it, because you want to get that confidence in sell-through. At the end of the day, if you purchase thousands of units and they don't sell, you could potentially get stuck with that inventory if you can't return it to the store, or you might have to sell it at a loss if the price tanks. So those are things we want to mitigate, and we do so by placing test orders, small amounts. As you gain more experience with selling on Amazon and you're selling more products and you have a much more thorough understanding of the processes, you can go deeper on SKUs and purchase pallets and thousands of units at a time where it's appropriate. Regardless of what level you're at, whether you're doing 7 figures in sales or if you are a brand new Amazon seller, the process is generally the same in the sense of purchasing inventory. We're purchasing volume appropriate inventory, and we're keeping that 30 to 45 day supply. And I would be doing that whether I was a beginner seller or a $10 million Amazon seller. Our Amazon business did $4.5 million last year, and we're slated to do at least $6 million this year in 2024. And the way we run our business is very simple. We do brand direct outreach, contact brands directly, look to close wholesale accounts with them. Once we do that entire logistics process that we went over, and we place the test order to make sure the inventory is going to sell. Once it sells, we will then jump into a more volume appropriate order, keeping anywhere from a 30 to a 45 day supply. If the items get stale and don't end up selling for whatever reason, because it does happen, we'll reduce the price in order to get rid of them, try to at least get our money back, and then make a new investment that's going to make us more money. Rinse, repeat, and growth. That is the process of selling on Amazon. So how do you go from $0 to $10,000 per month in profit? And most important thing you have to realize is that sales is not profit. So if I sell $100,000 per year, I have many different costs associated with that in an inventory-based business on Amazon in order to get there, such as Amazon fees, cost of goods sold, shipping, overhead expenses, and so forth. And because of that, all of those costs come off of your top line revenue. So generally speaking, what can you expect to make on Amazon? Our wholesale business does anywhere between 10 and 15% profit margin depending on the month. And Amazon wholesale in general is a much lower margin business than, say, a private label business. This is because you're either purchasing through two-step distribution or the brand directly, and you have to pay a higher unit cost than you would if you were doing a private label. However, it comes with much less risk, and it's extremely scalable quickly because you're turning that inventory over and over again. Though it's a volume-based business wholesale, so while there are slightly lower margins, you can make up for those lower margins by doing massive amounts of volume. With private label, you could potentially expect on Amazon anywhere between 20 to upwards of 30%. And that is one of the most appealing parts about private label, is because your business is not necessarily just confined to Amazon, but you could have a Shopify store. You could be selling on multiple other platforms as well. Some things that we're looking to do in the brand direct model, where we're taking brands, products that are already selling and introducing them to Amazon to gain some experience in private label and learn things like SEO, content, and advertising, which our team has a lot of experience in just from working in brand direct wholesale. But with private label, while yes, the margins are a lot higher, it's going to come with a little bit more risk. That's why I recommend the beginner Amazon seller starts with retail or online arbitrage, then progresses into wholesale, scales their wholesale business, and then looks at private label once the wholesale business is generating enough revenue as a turnkey model. So back to how you can make $10,000 in profit per month. Well, I just told you that the wholesale business model is anywhere from 10 to 15% margins depending on your overhead. But arbitrage, and it is going to vary based on the size of the seller. Arbitrage is a little bit higher profit margins, but again, at the end of the day, you're probably left with somewhere in that 15% range. So other thing you have to realize when making an assessment of how to make $10,000 profit on Amazon is that profit is not distributable cash to the owners. And if you have one owner or multiple owners as partners, that requires distributable cash. So your profit margin, even if, let's say your profit margin is 15% on $100,000, you sold $100,000 in a year and your business's profit is 15%, so you made $15,000 pre-tax. Well, you have to now pay tax on that, and then you have to have enough money after reinvesting back into the business to then pay the owners. So you see that scaling an inventory-based business is not as easy as the gurus make it out to be. And I'm going to let you in on a little secret, guys, about these gurus. The gurus are utilizing their Amazon numbers that once were as marketing to sell you into a course. This is not to say that courses are bad and there's not phenomenal Amazon coaches and teachers out there, because there are. But at the end of the day, if that Amazon guru is showing you more about their luxury lifestyle on their $1 million top line sales and not actually showing you what goes on in their Amazon business or talking about what it takes to actually scale an Amazon business, chances are they're making a hell of a lot more money selling a course to you than they are actually selling on Amazon. Again, I don't want you to think that all courses are bad, because courses are great to help bridge the gap in knowledge and achieve your goals faster and learn from the mistakes of others. But it's important to carefully assess who you are purchasing your course from and look at who is selling it. Are they showing you things that are actually happening in their business? Are they talking about the current numbers that they're doing and showing you proof with sales screenshots? Are they talking about the current topics on Amazon and the real data associated with building an Amazon business? These are all things to keep in mind. Don't get that shiny object syndrome and see flashy Lamborghinis and go out and spend $5,000 on a course, because that's probably wasted money that you could spend on inventory. So realistically speaking, if you do, let's go from $100,000 in sales. So we already talked about $100,000 in sales. Well, 15%, say you're a sole owner, now your business is making $15,000 in a month. Well, now you have to pay taxes on that $15,000, and you probably, especially if it's your first year, you reinvested most, if not all, that back into the business in order to amass that $100,000 in sales if you have limited capital. So you're probably not left with anything at the end of the day in your first year of business. And I'm going to let you in on another secret, guys. That's normal. In the first year of business, you shouldn't be looking to pay yourself. You're not going to scale it that fast. And if you're looking to do this as a get-rich-quick scheme, you should go into another business, because it's not a get-rich-quick scheme. Selling on Amazon is long-term growth and building a business that is able to continually generate revenue and deduce profits for the owners over a long period of time. So let's bump that $100,000 up to $1 million top line. So now we're doing $1 million in sales. Let's say we now went from 15% to, let's go to 12%, right? Because there were some more costs associated with that growth. So now that we're at 12%, well, you got to pay taxes on that 12%. And at the end of the day, you also have to take some of those profits and reinvest them back into the business. But now you're making $120,000 pre-tax bottom line in your business, EBITDA, earnings before interest, debt, and taxes. And from there, you can take a certain percentage of that to put in your pocket. So if you're doing $1 million in top line, I would say it's time to probably pay yourself, and you have to assess the cash flow needs of your business. So determining what amount of money goes into inventory, what amount of money gets set aside for taxes, what amount of money goes back into the business for profits to maintain the health of the company, and then what amount goes back to the owner for owner's pay. So on $120,000 bottom line, well, maybe you're taking, let's say, $50,000 a year. That's a reasonable salary, I would say, for somebody running a $120,000 a year business. So you can see that running a $1 million business on Amazon, and you're really only putting in your pocket $50,000 per year. That's, of course, at that 12% margin. If you're doing something like private label, well, you might be making a margin now of 20, 30%, and you could be living on a much larger portion of income. But again, private label comes with a lot of risks and rewards, but I wouldn't recommend it for the beginner. But as you grow, it's something to aspire towards. The last thing I want to mention about getting to $100,000 in sales or $1 million in sales is, how do you set a roadmap to get there? Well, as a company, we don't set sales goals. We aspire to achieve certain sales numbers, but we rely on the goals surrounding our inputs. So things like our purchases. What amount are we buying from our suppliers per week? Because we can back into a sales number from a certain ROI. ROI stands for return on investment, and it's the amount of money that I get back for every dollar that I put into an investment. So if I spend $10 on a product and I make $1 on that item, I'm only making a 10% ROI. Whereas if I'm spending $10 on a product and I make $5 on the item, now I'm making a 50% ROI. So that's a much greater return for my dollar than that $1 would on 10. But if I'm purchasing a product for $1 and still making $1, I'll still make that investment if it's selling, of course, because now I'm making 100% ROI. ROI is based around your capital. Profit margin is based on the amount of money that you make relative to the amount of money that you sell. So a 10% profit margin on $100,000 in sales is $10,000, whereas ROI is based on your purchase price associated with the inventory and then deducing how much you're making from that purchase price. As a beginner Amazon seller, to better understand the accounting and finances associated with your business, I would recommend reading Cindy Thompson's Profit First for E-commerce Sellers. This book will talk about how you can scale your business in a healthy way by allocating your cash to things like inventory, profit, to the business owner's pay, and taxes. It's incredibly important when running an inventory-based business to understand where your cash is going and what it's being used for, because you could wind up in a position where all of your money is tied up in inventory and you have no money in the bank. This we call inventory rich and cash broke. You really don't want to be there as an Amazon seller because it can be extremely stressful. Yes, it's good to make investments into inventory, and you need to in order for your business to grow, but you want to make sure you're doing so in a healthy manner and not over leveraging. On the other end of the coin, in my opinion, leverage is a great tool, specifically credit cards, lines of credit, to scale your business because you can do so faster, as well as with net 30-day terms. Now, all of this is not meant to discourage you. If anything, it is meant to inspire you and set realistic expectations ahead of time. Amazon FBA is an amazing business model because you can scale it very quickly in a year's time frame. But on the other side of the coin, it is also an inventory-based business, and that means as you grow, you have to continue to invest into your business through the form of inventory in order to achieve those larger sales numbers. So as you grow, you want to make sure you preserve your profit margin and also continue to make smart investments in inventory so that you can get back that capital, not just to grow your business, but also to pay yourself. So on 100,000 in sales or $1 million in sales, if you're doing RA, OA, or wholesale, you are not living a luxury lifestyle. And I hate to break it to you, but that's what all the ads on the internet that you see are talking about. So if you guys have watched this video full and through, thank you so much, and I hope you learned something. If you did learn something, take this video, share it with a friend, somebody who's interested in starting to sell on Amazon or who's already selling on Amazon and could use this video as advice. Thank you guys so much for watching, and if you haven't hit that like button and you enjoy content like this, make sure to smash that like button because it really helps out the videos in the algorithm. Let's set a goal to get at least 100 likes on this video. And if we get 100 likes on this video, I'm going to give away 3 coaching calls to any one of my subscribers. So let's get this video to 100 likes, share it with a friend. If you guys haven't seen the other videos on my channel, check those videos out as well. Subscribe to the channel, hit that notification bell. Check us out on Instagram under Operation AMZ, free private Facebook group, Amazon FBA Wholesale Mastermind. Thank you guys so much for watching. Stay safe, stay healthy, and we will see you next time.